Hi, Natalie. Hi, Natalie.
Hello.
I guess we're the first one on.
I guess so. How are you?
I'm hanging in there. I'm
Yeah.
gonna do my business law homework. I just got off another class, my business communication class. So I go for that one 9:05 to 10, and then this one 10 to 11.
Yeah. I have to, it's a lot. Like I get this semester is for me, it's taking forever.
Yeah. But we gotta do what we gotta do, right?
Yeah. And how is your bathroom going?
It's going. I tried to I was hooking up the sink and it didn't tell me that you had to put like on the instructions, it didn't tell me that you had to put like an adhesive because I noticed the water kept coming out the bowl under the bowl. And in the instructions, it didn't even tell you that you had to go on there because it's a vessel sink to had to put the adhesive. Lucky I looked online and Googled it and I found out. So I put it on last night, it dried, and now the water's not coming out.
Oh my God. It's a lot. I don't know how you do it.
You know, I'm just like a Mrs. Bob Vila.
You can come over to my house, Tanisha. I got some jobs for you.
Oh my God, Professor, I just remodeled my whole bathroom by myself. I love YouTube. I put there's a ceramic towel on the floor and
Wow.
on the walls. And I was just telling Natalie I bought a new vanity, the one with the vessel bowl.
Okay.
And in the instructions, I kept wondering when I hook up the pipes why the water kept coming from under the bowl. In the instructions, it didn't tell you anything about you had to put like a silicone under it. So I'm like, water coming out. No, I'm not stupid. I'm doing it right. I happened to Google it, and it said anytime you buy, it's different. Of course, it's different from a regular vanity because it's a vessel and it's shaped funny. You have to put a silicone. So I had to run to Lowe's, get the silicone, let it dry, put the water, and it was all good.
Oh gosh. You're a better woman than me. I'm just like dumb when it comes to that stuff.
Yeah, I mean, you can easily pay someone, which I don't have the money to do that right now. So I just say, you know what? I mean, I made some mistakes, but it's behind the dryer where no one is going to see it.
That's right.
Unless they're going to come to my house and pull my washer and dryer out and say, oh, look what she did.
Yeah, I could do molding, but I stay away from plumbing.
Oh my God. I have fun. I mean, lucky I'm confined to the house where I could take my time. I don't have to rush and do it all in one day.
Yeah.
So it's decent.
And it's a good time to do something like that, you know?
That's right.
Now I'm going to go crazy. I got to find something to do besides schoolwork, because I'm going to go nuts.
Well, that's awesome.
Yeah.
Being productive during these times.
Yes, very.
I cleaned out my storage. Well, my husband and I went through and did some cleaning out of our basement storage area. So we were a little productive yesterday. Pictures. Oh.
I just want to get to the yard where the tree fell already. It's this weather.
Yeah.
And it's just horrible. My yard looks horrible.
Aw. It'll be here soon enough.
Hello.
Hello, Beck.
I'm going to need to talk to you after class
Okay. Okie dokie.
because I'm very behind in things. I was sick this past week.
Right. Okay.
Not COVID-19, I promise.
That's okay. You're in your house. As long as you're feeling better.
Yeah.
That's good. Let's give everyone a minute or two to get here.
Don't mind me. I haven't eaten breakfast yet and I got to eat. So I'm going to be eating while I'm watching and talk and, but I'll turn off I'll put on myself on mute.
Okay. Sounds good.
Hi, Kelly. Long time no see.
Hey, long time see too.
All right, guys. Well, maybe we'll just get started. We're going to start into chapter 17, our final chapter. You guys survived. But before we do, I wanted to take a minute and talk to you about, if you saw, the grading policy that finally came out on Friday. So let me make sure I'm recording. Yes, I am. And let me share the screen with you. So this came out from, I guess it was, actually it was I think it was my boss, the VP of Academic Affairs, where they talk about how we're going to be grading. So basically, I'm grading you as I normally do, AB, whatever. Then you, and here's where this is on your response, your side of it. You, the student, will have the option to change your final grade in all your courses. So it's not this course or that course. You could pick the courses to a pass grade, with the exception of the health sciences programs. At the end of the semester, you will receive a final letter grade for each course completed. You will have 7 days from Wednesday, May 20th at noon to decide if you want the option of replacing the letter grade with one of the following grade options. So it will be pass satisfactory, PS. So if you received a letter grade of a C or better, you will be then changing it to a PS. A PD would be the passing grade equal to a D or D plus.
We should have the option to change it to A. I'm just kidding.
Well, no, you can't do that, Natalie, okay? It's either, okay, no. But the pass grade option, and here's where it really impacts you as a student. Changing it to a PS or a PD does not impact your GPA at LCC. So the pass grade, the PS, will say, hey, you passed the course, but it doesn't impact the GPA. Your letter grade will impact your GPA. Please know that the PD will not transfer as an individual course, and in certain cases will not meet prerequisite requirement for courses where you must earn a C or better. So keep that in mind, whether you get a PD or a D, it's not going to transfer. It's not going to be a prerequisite if you're required to have a C or better in that course, but it will not impact your GPA, the PD. Students will also have the option to withdraw at the end of the course. The W is not a passing grade, and it signifies that you withdrew from the course and will need to retake the course in order to complete it. A W grade is not included in your GPA calculation. So then it goes on to answer questions. So this should be out on the web, or you might have received an email. It's out on the student portal, actually. So what is a W grade again? If you want to withdraw from the course, I'm not going to go through every single one, but I wanted to show you this. What is an incomplete grade? An incomplete is a temporary grade given in cases when the student is unable to complete the semester's work. So at this point, it's you are sick so badly that you're in the hospital, okay? Or it's emergency situations. Now, I did have one or two students who had technology issues. They have no access to the internet. So they'll be finishing on an incomplete. But for you all, you've been in it with us now through the middle of March. It's you got extremely sick and cannot complete the work by the end of the semester. An incomplete could be issued. Now, an incomplete isn't you passed or you failed. It's just you still have work to complete. Normally, you need to have that work completed by the end of the fall of 2020. But they extended that. So if you do get an incomplete in a course, you have through the spring of 2021 to finish the coursework you still need to. So just so you understand what that is. And that's the only time I'll be offering an incomplete at this point in the semester. You become extremely ill or have an extreme emergency, you need to care for somebody that's extremely ill. You need to initiate that process of requesting the incomplete, and you should contact me if that situation arises. For accounting majors, you want to finish this class. And here's why. You need to have it finished by at least the end of the summer, or else you're going to be a year behind, because the next class in your sequence is only offered in the fall. So no matter what, you want to get Accounting 112 done at the latest the end of the summer. But you all should be fine unless something bizarre happens in the next 2 weeks with you. It goes on to talk about impact on your financial aid. So if you're somebody who relies on financial aid, you want to take a look at that. They're giving financial aid waivers, it looks like. So take a read through that, make sure you understand it. And if you have any questions on it, you could bring them to another class. But I just want to make you aware that that final grading outline, whatever you want to call it, standard has been developed and is available to you. Do you have any questions right now? No?
I do.
Go ahead.
How would we contact that we want, the passing grade? I didn't see any information on how we do that.
Students will receive, okay, after you receive your letter grade, you have 7 days right to change instead of a letter grade or withdraw from your class, okay.
Where is that?
I'm looking for it to find out how you can alert them.
Yeah.
There's nothing in here. I think, let me see. I think it's going to be a process of you contacting the registrar, but I will get that information and I'll find out for you, okay?
Okay, thank you.
You're welcome. Yeah, that's weird that they, oh yeah, we could change it, but there's no directions on how to change that. So maybe they're still developing that. Okay? So they have a little while yet because it's about a month away. Anything else? All right, let's go to chapter 17. Oh wait, I see a chat. No, if you, Rick, if you take the pass satisfactory or pass D instead of the regular letter grade, or a W, a withdrawal, they do not impact your GPA. If you keep the letter grade, it will impact your GPA. Exactly. So if you don't want to change your letter grade, you don't do anything. You just let it go. And essentially, so everybody knows, the reason they're doing this is because we know it's a transition for traditional in-classroom lectures to now be online. And it could be difficult for people to adjust to that. So maybe somebody who was normally an A student in the classroom, because of this transition very quickly to this online format and getting used to it, their grade might have suffered a little bit. Maybe they're going to end up with a C in a class or a B even, and they're normally getting A's. Well, we don't want you to be forced to take that B or the C and impact your GPA if you're, concerned about that. And it's important we keep our GPA up, especially if we're transferring to other institutions, because our scholarships could depend on our GPA here at LCC. Okay, so, but if you want to meet with me or have any other questions, just let me know. But yeah, Rick, you're good now. Anybody else? Okie dokie. So I'm going to go to a Word document, blank Word document. We're going to get going on chapter 17, which is really the culmination of accounting 111 and 112. You guys have the basics of accounting right now. You know the accounting cycle, you know some basic stuff we do with assets, the root basic stuff. There's more advanced stuff we do with our assets and liabilities and equity, but you have the basic understanding of them. How we deal with cash and bank reconciliations, how we deal with accounts receivables and uncollectible accounts and notes receivables, and property, plant, and equipment and intangible assets. We looked at current liabilities. We looked at long-term liabilities and stockholders' equity, as well as investments. So you get a general understanding of all those major components that are normally in a company. Well, now we're going to take all of that stuff you learned and show you how probably the majority of you who are not accounting majors will use it in your career. And that's through financial analysis. Okay, so that's what this chapter focuses on. This thing called financial analysis. So I love to use the analogy of you are a doctor. All right. And a doctor's main objective is to determine your health, right? You go to the doctor. Matter of fact, I got to go tomorrow just for a regular checkup and take a look at how am I doing? How am I doing as a person? I go to the doctor, but how is a company doing financially? Okay, so different users of the financial statements will analyze the financial statements for different reasons. So if you are an external user of a financial statement, you may be looking at, so external users, remember, are people like the shareholders, the creditors, and even suppliers. Okay, so they want to see some things especially these external users. Things like past and current performance. How well are you doing currently? How well did you do in the past? That helps predict the future. What is the company's current financial position? Okay, and we're going to get more into that. What do we mean by financial position? But you could think of it as, are you healthy? Or unhealthy? That was interesting. Okay, so as a person, are you healthy?
Holy Donald Duck.
Or are you unhealthy? And that's a company we want to know also. Are they financially in a good position? Okay, and we're going to define that more. Do they have enough in assets to pay off liabilities? How do they have their company created? Do they have a lot of debt as compared to equity? We're going to be looking at things like that. And then, as I said, it's going to help us determine future performance and risks associated, with the company. So an external user is really looking at these different components. And think about what these people are doing. The shareholder, they're giving the company money. Right, so the shareholder gives the company money. Investment. They want to be sure the company will provide a return on their money. They don't want to invest in a company that's failing financially. So doing this financial analysis will help them identify, is it strong? Is it continuing to grow? Or is it starting to fail? Same with creditors. Remember, they're the ones who give the company money, right? But in this case, they loan investors of the company from the standpoint,
Lori,
they loan the money. They want, yeah, my internet's a little unstable right now.
Lovely.
Okay, so just hang in there with me. Hopefully it'll gain itself back. I'm getting a message. So they want to be sure the company can pay back the loan and the interest. Same with suppliers. They're also extending credit to the company, usually as accounts payable. So they're always looking to be sure that the company that they're dealing with is financially strong. Does that make sense? Silence means yes. Okay. There's also,
Professor Lori, give me just 1 minute to finish copying this down.
sure. I'm typing instead of writing, so. So there's also internal users of financial statements or financial information. They're looking for certain things. Example, the managers of the company, the officers, and even these guys, the internal auditors. So we're just giving you some examples. There could be more. The employees could be involved here. Outside the company, you could also have your competitors looking at you. So we're just giving you a flavor for some of the groups of I guess just groups, we could say, entities that would be concerned in looking at the financial health of a company. So the managers, of course, are very interested because they want to be sure the company is operating efficiently and is strong. Financial analysis will tell them that. We're giving you the why. Officers, they have pretty much the same situation, but something else you have to remember about managers and officers. They want a strong company financially because it's where they work, right? But they also want to make sure the decisions they make are creating a financially strong company. And that's what officers are really overseeing, that major decision-making of the company. Are the decisions we're making helping the company to become strong or stay strong financially? So what we're going to show you is how they determine that. We're telling you the why they're going to be doing the exercises. Same with internal auditors, okay, or any employee of the company. Okay, so they are also going to use the tools of this chapter to make sure the company is strong and find problem areas that need to be corrected. Okay, so a little bit of why. Who's using this? Who's doing this stuff? And for some of you who may be business administration majors, you may go into a banking career. You may become a loan officer. You're going to be doing the stuff we're talking about in chapter 17. I've seen it, okay? Some of you may become accountants as an auditor or as a regular accountant. You do these all the time. The tools we're about to show you, you're always using these tools because you're always assessing the health of a company, whether you work for one company or whether it's a client of yours. Okay? So the major areas we're looking at are what we call liquidity. Sorry for my dog, if you could hear him. Efficiency. Liquidity and efficiency. Okay, liquidity and efficiency are going to look at how well the company can pay current liabilities. So generally that's what they're looking at, and how well the company manages its assets. How well do they use the assets of the company? So that's one of these building blocks of analysis, or one key area we look at when we're doing financial analysis. Another is solvency. Solvency measures how well the company can pay its long-term debt. So that's what we're focused on there. So first we see how well they pay their current liabilities, the stuff coming up in a year, and then how well does it manage its overall assets. We're going to look at some specific assets, like how well does it manage inventory? How well does the company manage accounts receivables? More towards Friday, we'll be looking at that. On the solvency side, we're seeing how well, or to go on there, well, no, I talked about current liabilities. How well can the company pay off its long-term debts? Can it? If we loan them more money, will they be able to pay us? And can they pay the interest? So we're focused on analyzing that side of the company. Profitability. And that's exactly what it sounds like. How well does the company perform to produce a profit for its investors? So we'll be looking at a couple different tools to determine that. And then market prospects. And this will look at if the company is a good investment opportunity in the market. So we're going to be focused more on the stock market and fair value of the corporation to see if it's worth investing in. So these are the key areas of financial analysis. Now, let you get that down. So we're looking at internal and external people, are looking at how well the company can pay current liabilities and manage its assets overall, how well the company can pay its long-term debt, how profitable the company is, how well it produces a profit for its investors, whether they be the creditors or the owners, and if the company is a good investment opportunity in the market. Is it a good stock investment? External and internal decision makers focus on these 4 key areas. Now we know that they're looking at the company maybe for different reasons, but they want to assess each one of these major, what we call building blocks of analysis. Now, before we go any farther, I said very beginning, I like to think of this as the analogy of going to see a doctor. So tomorrow I have a brand new doctor. My doctor decided to move to West Virginia the beginning of March. So yeah, he left right before all hell broke loose. And I guess he's living in West Virginia and working there now, but I have a new doctor. So this can be interesting. And so this can be really cool because I know going in, it's like financial analysis. What's going to happen? I'm going to walk in and he's going to ask me all about myself. He's going to want to know, who am I? Am I married? Do I have any kids? Because he wants to get to know me as a person, not just start analyzing me. And that's what we do in financial analysis. So remember, we're given a whole set of financial statements. So I'm just going to take a time out here and stop sharing this. And I'm going to take you out to the web. Whoops, let me share that. Share my screen. And just give me a second to get over there. Okay. And I go to my old standby, Starbucks. And I'm going to go get their financial statements. Ooh, they got a whole bunch of stuff going on there. So up here, I get all messed up because of this. Okay. And you could see there's a lot of financial data out here, all used for financial analysis. But I'm going to, hold on, sorry about that. There we go. I'm going to focus on their main annual report. So as a financial analyst who wants to see how well Starbucks is doing financially. How healthy are they? Before I even start using different tools we'll be talking about, something going on with my internet, just hang in there with me. I'm waiting for it to download. It's gonna give me a hard time, isn't it? Let me try it again. Oh, come on. And that. And that. Sorry, guys. Now. You there? Did you
Am
lose?
indeed.
Sorry about that.
Yeah, we can hear you.
Okay, my internet, hopefully we will be okay here. Let me go back to sharing my screen. Okay, now it's okay, I think. Come on. Tell them to get off, would you? Sorry. I think I have to tell my son to get off the internet. It's bad. Give me a second.
Same thing here. If someone's watching watching Hulu or something, then nothing else works.
Okay, they're getting off. My son's here. I'm back.
Yay.
Hopefully now it'll be okay. So let me see if I got downloaded here. Yes, okay, so let me share, and they're off the internet, so. Okay. One person at a time, can only be on the internet in our house. Okay, so here is Starbucks annual report. And this is very long. Look at that, it's a book. It's over 100 pages long. Now, if you're being a true financial analyst and want to know how healthy is this company, what's going on with it, I need to learn all about it, like a doctor does. This is the first thing you do. You read this before you even start pushing numbers together and crunching them like we will be seeing in this chapter. And you can see there's a lot of stuff. So they're going to talk about their business, what kind of risk factors are involved with their business. If they have any unresolved staff comments, this is a normal thing. Talk about their properties, legal proceedings. They have issues with mine safety, it sounds like, and they have to tell you about it. Shareholder matters and issuer purchases of equity securities. Selected financial data they talk about. Then management starts talking about how they feel the company is. What's the financial condition and results of operations? Did we do good? Did we do bad? Why? So you can learn more about the company. They're going to talk about market risk a little bit. And then finally, we get to the 4 financial statements and the notes. And that's where we will be focusing our time in this chapter, not on Starbucks, but that's what financial analysts will be focusing on, the 4 financial statements and the notes. And then we go and we read the rest of it. So there's a lot more information out there than the 4 financial statements with some notes to tell us about the company. We could get it from like a 360 perspective of the company. The management, the auditors, putting all of their viewpoints of the company together in this report. So I just want to make you aware of that. That's your starting point. Just like I said, your doctor. Thanks, Clarence. Could you guys hear my dog drinking his water? He's so loud. Okay. So I'm going to stop sharing that. I'm going to go back over to my screen.
We want to see your dog.
You want to see him?
Yeah.
Come here. Come here, Clarence. There he is.
Oh, look cute.
Aw, he's looking, Natalie. Clancy.
Oh.
He just came back from his walk. He's looking behind the computer for where you're at. She's hold on 1 second. She's not outside, she's in the computer. Okay, there you go. All right, guys. So that's our starting point. Get to know the company like your doctor gets to know you. Then we start our analysis. Now we start looking at numbers, kind of like when your doctor says, okay, now let's see a little bit more. Let's identify some stuff about you. So maybe they'll take your temperature, your blood pressure, your heart rate. Maybe they'll even say, go have some blood tests done. And they'll get the results. So we're going to now show you what tools we use. Like they use a blood pressure machine or a thermometer or blood test, okay? We're gonna use the same kind of tools, but from a financial and analysis perspective. And then once they get the results, so we're not even gonna get into the calculations yet. We're gonna go to the end. Just like your doctor gets the results. The doctor will say, oh, your blood pressure is 150/70. Well, that's good, I guess. I don't know. Is it good? I don't know. Okay, so it's just a number. But the doctor knows that there has been history created over time for people in your age group that will say, what is a normal? What is not normal? It's either too high or too low. And they'll compare your readings to these norms they have or standards. We do the same thing in financial analysis. We take the results and we compare them to prior year amounts, to competitors' amounts. So whatever it is we're looking at. Industry averages or even standard guidelines. So I want you to know that when we do this analysis, the next part we'll be starting to look at, we're not creating it in a vacuum and analyzing in a vacuum. We are creating information about a company, taking its temperature, getting its blood pressure, getting its pulse, and then comparing it to the old health. How well did the company do last year or the year before? What does their main competitor do when it comes to these things? What is their blood pressure, their temperature, or their pulse? Okay. What about everybody in this age group? So for a company, it would be their industry. Okay. I'm going to show you in a second. There's a company, it's in Philadelphia, I believe, RIA. No, it's RMA. RMA, and it's a nonprofit that what it does is it goes and it collects information about companies in all different industries. And the tools we're going to show you, they average the results of these tools together by industry. And they'll say, okay, so if you are in transportation, here is your industry average for this tool. Here's your industry average for this tool. So now you can better compare, just like the doctor will say, okay, someone in their 50s, here's your normal pulse, which will be different than somebody in their 20s. Okay, so you have to look at your peer group. So that's why we get these industry averages. Sometimes there are strict standard guidelines where it doesn't matter how old you are, if your blood pressure is here, you know, it's too high. Okay, so that's what we're doing though, but from a financial health perspective. Your doctor does it from your physical and mental health perspective. Does that make sense? Silence means yes. Okay. Now, what are these tools? Well, let me show you first before I go to, let me share my screen on you. Okay, and I'll show you RMA Associates. Whoops, that was spelled very wrong. It's not fertility we want. Nope. Risk management. Risk Management Association. And they put a book out, which us old timers, we like to go and buy the book. Okay, but you can also receive or buy industry averages right online. So let me see here. This is all about the COVID. Just because I want to show you this. So if you look over here, down at the bottom, it says publications and tools, statement studies. Okay, I'm going to click on that. And then here it is, annual statement studies. RMA's annual statement studies is the only source of comparative industry benchmark data that comes directly from the financial statements of small, medium-sized business clients of RMA's member institutions. So you can buy a book for 480 bucks, you can go online, or you could download industry averages for your industry. So they're out there and you can buy them. Or you can just grab your competitors' financial statements and do the same kind of analysis for them as you're doing for yourself and compare yourself to them. So it's just not one thing that you're stuck with. You're just not looking at your friend next to you and going, I don't know, like you do with your test. Oh, they got a 90, I got an 89, or an 85. I guess they're doing better than me. You don't know that. Industry averages tell you more. Oh, the class average was a 95. Well, neither one of you did better than the class average overall. So it's important that we look at more than one of these comparisons when we're identifying how healthy a company is. Okay, so there's a lot involved. And that's why companies will have, you know, financial analysts. That's what they're doing. Their main job is to analyze the company day in and day out and determine these kind of factors. Okay, so today, for the next 15, 20 minutes, we're going to talk about the first major type of analytical tool or analysis tools. So there's three major tools we use, or three major categories of tools. The first is what's called horizontal analysis. Oops. The second is vertical analysis. And the third is ratio analysis. So today we'll get through horizontal analysis. I may not be able to hold class on Wednesday. If I can't, I will email you or put it on an announcement, you can listen to the video for vertical analysis. But I'll let you know that for sure. So if I'm not here Wednesday, I'm going to have you do vertical analysis on your own. And then Friday, I'll take any questions on it. And then we'll get into the ratio analysis for over 3 classes. We'll spend a lot of time on that. Because ratio analysis isn't one thing. It's about 13 or 14 different things, as you saw from your reading. So what are you trying to get out of this? First of all, how to complete the mechanics of each analysis, but then also going beyond that and identifying, what is it telling me? Why am I even doing this? Okay, and that's the most important part of any type of analysis, figuring out what it's telling you. So horizontal analysis is going to be our first tool. Now, normally, horizontal analysis, sorry, I gotta fix that. Here's what we're doing. Determining the change in an item from a base year to a current year. By percentage. So we could say it's the percentage change in an item from a base year to a current year. Normally, formula for horizontal analysis. And if you think about it, what's horizontal? Well, it's going across. So we're going to use a balance sheet or an income statement. And those are the 2 major financial statements that we use to conduct for horizontal analysis. And we're going to look and see, where was cash at last year? What's its amount this year? How much did it change by percentage-wise? So here's how we calculate. We take the current year minus the base year. So first we find a dollar amount change. Current year minus base year will tell you if it increased or decreased from last year. And then we divide that result by the base year amount. That will tell us the percentage that item changed from last year to this year. And you have to be careful. You have to make sure if it's a positive change, you show it as a positive amount. If it's a negative change, you show it as a negative amount. So I'm just going to create really quickly a very small income statement. Now, whenever you see financial statements, they will always be what we call comparative. All that means is that there's more than 1 year of information provided. That doesn't mean you'll have one column with 3 years of information in it. No, you'll have 3 separate columns maybe showing 3 separate years of information in consecutive order. They're called comparative because you can then compare the information from 1 year to the next. Now, I'm going to show you information for 2 years for this company. So I'm going to say 1 year is going to be 2019. The second year will be last year's amounts, 2018. Companies never just show 1 year's information. And it's because of this, because of financial statement analysis. So let me just, okay, so I'm going to call this Dunn Company income statement. And this is going to be for the years December 31st, 2019 and 2018. And I'm first going to have revenue. So let's say for 2019, it's $200,000. Let me make this dollars. $200,000. And I'm going to say cost of goods sold is $150,000. My gross profit then will be $50,000. My expenses are going to be $35,700. I better get away from my strict numbers. And I'm just going to come down and say net income then is $14,300. So that's where my numbers were for 2019. Let's say I'm going to show on here what my results were for last year. Well, last year's revenue was $189,000, and I'm making these up. Cost of goods sold was $145,500. Gross profit then was $44,500. My expenses were $30,200. Profit, oh wow, I didn't mean to do that. $14,300. Just happened that way. But that's what it ends up. That's what it ends up. So here's what I'm going to do. I should have done this to begin with. How do I do horizontal analysis? Well, I'm just going to add 2 columns to the right. You could do it in one step, or you could do it how I'm going to do it. The first thing I'm going to show is the dollar change. Then I'm going to show the percentage change. So I'm going to do this part of the formula first for each one. So 200,000 going across first. How did revenue change? It increased from 189 to 200,000. So 200,000 minus 189,000 gives me $11,000 positive. Now, I want to know how much did it change percentage-wise. Now do the rest of the formula. Divide the 11,000 by the older year, 189,000. Or that base year. And I get 0.0582. So I'm going to say 5.8%. So because it increased, it went from 189 up to 200,000. It's a positive change. Percentage-wise, it increased 5.8%. Are there any questions on that?
Where do you get that 5.8%?
Take the $11,000 here, Natalie, and just like in the formula, divide it by the base year amount. Base year here would be the older year, 189,000. It's always the older year.
Okay.
Okay, anybody else? Good? Do the same thing for the next year, or for the next item, for cost of goods sold. 150,000 minus 145,500. And you get 4,500. That's the dollar change. It increased from 145,500 to 150,000. So it increased 4,500 from one year to the next. What percentage did it change? Now take the 4,500 divided by the 145,500, the older year. And it changed 3.1% because it comes out to be 0.0309. Change that to a percentage. If you multiply that result by 100, you get your percentage of 3.1%. So cost of goods sold increased from last year to this year, 3.1%. Do the same thing with gross profit. It goes from 40, you start with, subtract the current year, 50,000, minus the base year, 44,500. The difference in dollar amount is 5,500. Divide that by the 44,500, and you get 12.4%. Now, if you're sitting there going, wait a second, 5.8 plus 3. That doesn't add up. No, it's not going to, because we're not going up and down the financial statement. We're going across. We're determining how much a specific item going across changed. So percentage-wise, gross profit increased 12.4% from last year to this year, because we're basing the change on last year's numbers. Expenses, 35,700 minus 30,200. They increased again 5,500. What percentage did they increase from last year to this year? Well, divide that 5,500 by the 30,200 older amount. They increased, wow, 18.2%. And then we get 0 and 0, right? Because net income didn't change. It was the same last year and this year, even though the numbers to get to net income were different. So this is telling us how we changed from last year to this year, item by item. Now you could do this analysis on your balance sheet as well for all the assets, liabilities, and equity. Now, I don't know if these numbers are good or not. What do I have to do? I have to look at maybe how I budgeted. Maybe we wanted revenue to increase 10%. It only increased 5.8. I look at my past performance. I look at my main competitor. How did their numbers change? Maybe I predicted 10%, but my competitor only went up 6%. How about the industry? Everybody, all my competition in my industry. And you have to do this on an industry by industry basis because every industry operates differently. Okay, so we're comparing these results to those results, things outside of our company and inside. And then we can see, oh yeah, we're pretty close to what the industry did, or wow, we're way off. We've got to investigate that further. And before we finish for today, that's really important. So as we go through this chapter, you're going to maybe see a result that's really off from the industry. So maybe somebody's revenues increased 3% and the industry's all increased 8%. You know, we don't say, oh, you did really bad, you're going to go bankrupt. Just like, you know, if your blood pressure is really high and everything else is okay, or, you know, the doctor doesn't focus just on your blood pressure and say to you, oh my God, you're going to die. Your blood pressure is so high. No, we find ways. We might give you medicine, things to correct it, might alter your diet. We look for problem areas. Inside, we tried to fix them. Externally, we ask questions about them to the company. What's going on here? Maybe there's something within those financial statements that tells us further, hey, we know this is happening. Here's what we're doing to fix it. Or we can't fix it. But it's identifying really good things and things that maybe not so good that need to be corrected. Okay, are there any questions on that? Okay.
Yeah, I have a question, sorry.
Yeah, go
I
ahead.
was gonna say, what happens where there is like a decrease in the year? It's gonna be the same calculation?
Right. So let's say, just for the heck of it, let's say that this number ended up being, whoops, 13,000. I know it's not, but let's say it did. What we'll do over here is we'll say, okay, net income, 13,000 minus 14,300. The change is negative 1,300. Now divide that negative 1,300 by the 14,300 older year, and we'll say it decreased 9.1%. So you would just show it, you did this calculation the same, except you would then show it in brackets or as a negative to show that it was an overall decrease and not an increase.
Okay, thank you.
You're welcome. Anybody else?
Question, Professor, but I was trying to wait till you finish. Is a little further down, so I wanted to make sure nobody else had any, or if you want me to ask it, is a little further down in the chapter, though.
Okay, hold on one second. Just make
Okay.
sure we can hang out. Okay, so before then I'll talk to you, Jazz, and I know Becky had a question for me. So Wednesday, I'll let you know what's going on. If I can't have class, then I will tell you what times to listen to in the video, and bring your questions to class on Friday. We will be, Wednesday, your focus is going to be on the next analysis, which is vertical analysis. And maybe we'll even run through a practice on Friday before we start talking about ratios. Okay, so if you don't have anything else, then I'm gonna stop sharing that. Anybody who has any questions could hang out. Everybody else, I'll see you next class. Okay, first,
Okay.
Jen.
I do have a question.
Oh, go ahead, Natalie.
On the gross profit. So I got 0.135. So why you move to decimal places instead of 1?
Wait,
Or just multiply it times 100. It makes it much easier.
there you go. So
Yeah, after you
Natalie,
get your answer.
Natalie, when you get your decimal, just multiply that result by 100, and that will be your percentage.
Got you. Thanks so much. Thanks.
You're
Jessica.
very welcome.
Does that work for everything, or just when it's 0 point?
Well, if it's, when you're trying to find a percentage and your calculation gives you the decimal, so say you want to know what percentage is 1/5, 1 divided by 5. Well, 1 divided by 5 will give you 0.20. Multiply that by 100 and you'll get the percentage. You get the whole numbered percentage.
Okay. Yeah, just one more thing. Because I've been sick all week. I haven't really been able to go, and so I haven't gotten really been able to finish the practices or do the test.
When do you need to?
Well, I'm planning on working on it this week.
Okay, so I'll give you through Friday.
Okay, yeah.
All right, sounds good.
Sounds lovely. All right.
Send that.
I'll
Have a good day.
Thanks.
have
you
a good
too.
day.
Bye, Beck. Jazz, what's up? Jasmine?
Can you hear me?
Yes.
Okay. Okay, my first question is, do you have pants on? Because everybody that's been sitting by their computer, they're fronting like they got pants on. You got pants on, right?
I've got pants on. I've got pants on.
All right. I just wanted to make you laugh. But okay. My first question is, when it comes to current ratio, is current ratio only the current assets divided by current liabilities?
Correct.
Okay, because when I got that one wrong and I kept doing it and I didn't know what was wrong with that one, so I wanted to make sure.
Yes.
My last question is for the Chapter 17 test, because I was thinking about taking it today. Is there definitions on there as well? Like vocabulary words? Just wanted to know if I should study
The final exam?
Chapter 17?
Yeah, the final exam test?
Yeah.
I don't have it out there yet.
I thought I saw it.
Oh, maybe I do. Maybe I do. You know what? Yeah, there's going to be, there's multiple choice.
Okay, there's multiple choice. Okay, I just wanted to ask you about that. And those were my only 2 questions.
All right. Wow.
All right.
You go getter.
Well, thank you. You have a great day. You look
Thanks.
wonderful.
Oh, thank you.
Have a good day.
See ya.
Bye-bye.
Bye. Anybody else, any questions? All right. All right. In the meeting.